Good morning, I'm Steve Forbes and this is 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, with news, lower growth is coming for China and everyone else for that matter. But first up on Saturday New Zealand time, we get the next US non-farm payrolls report. Analyst surveys suggest that we'll deliver 180,000 new jobs in May, well down from the 263,000 recorded for April. But today, the precursor ADP report suggests analysts may be overestimating the data, with figures showing just 27,000 new jobs, the lowest since 2010. This alternative survey shows that SMEs and manufacturers are doing it tough, shedding jobs in a significant way. The US Fed released its May Beige Book survey results this morning. It says economic activity expanded at a modest pace overall from April through mid-May, a slight improvement over the previous period. Manufacturing reports were generally positive, but there were some signs of slowing activity and a more uncertain outlook. While a global services sector survey also reports a slowing market with a contraction in the order backlogs of service companies. In China, their cakes and services PMI slipped to a 3-month low, but it is still expanding at a good rate. However, overall business confidence is also slipping. Meanwhile, the World Bank has cut its forecast for China's growth in 2020 to 6.1%. This is down from their prior 6.2 estimate. Lower business confidence, higher debt, and decelerating investment commitments are all behind the revision, all in turn driven by the ongoing trade war. And the IMF has also made a similar cut to its growth projections for China. While in China, steel output is almost up 20%, and that is keeping iron ore prices very high. Such data is in sharp contrast to the country's contracting factory PMIs, and it is not clear how this reconciles. In Canada, May home sales in Toronto surged 19%, while in Vancouver they are still in the doldrums and hit a 19-year low for May. In Australia, data released yesterday from the first quarter shows their economy grew at its slowest rate since 2009, up 1.7% from the same quarter last year, a drag on the annual rate of 2.4% in the year to March. This is a lot lower than its long-term average of 3.5% per annum. The US 10-year Treasury yield is little changed overnight and is now at 2.12%, and their rate curves are easing, with the 2 to 10-year curve now at 28 basis points and the negative 1 to 5-year down to 19 basis points. Gold is up again, but only by $3, now at $1,329 an ounce. US oil prices fell sharply again overnight, down more than $1 to just $52 a barrel, and the Brent benchmark is now at $61 a barrel. The Kiwi dollar is holding up well today and is now at 66.2 US cents. On the cross rates, we are higher, however, at 95 Australian cents, and against the euro, we are firmer at 58.9 euro cents. The TWI 5 is now at 71 and a new 1-month high. I'm Steve Forbes, and that was 90 at 9, brought to you by interest.co.nz.